Interest rates hit a low we haven't seen in nearly 4 years. How does this impact the market this week? Stick around for a couple of minutes and find out what's going on. Hello and welcome to everybody's favorite San Diego County real estate information program, San Diego Market Watch. Thank you for tuning in. Let's get right into the information for this week. Looking at inventory, that is down just a touch. And why? Because new listings are down and pending sales are up just slightly. Will pending sales continue to increase on this positive interest rate news? That remains to be seen. Let's take a look quickly at price reductions. We had a little uptick in those over the last 7 days. So some of those sellers that have been hanging around and hoping their home would sell are now cutting the price just a little bit. We're just a little over 7% of the standing inventory reducing price in the last 7 days. And median price from December to January has not changed. Waiting for those February numbers to come in at the end of next week, I believe. However, we have seen 4 months in a row of increasing median price. That's not to say that it's running away. If you look at median price over the last over the last 3 years, it's really been up and down and up and down. And we are certainly not at the highest level that we've seen in the last 3 years at this point. So flipping over here to the Freddie Mac 7-day average, mind blown, below 6%. This is a milestone in terms of what has been happening with interest rates over the last 4 years. It was the summer of 2022 when rates shot up from the high 2s, mid 3s into the nearly 7s practically overnight, it felt like, and it sent the market into a tailspin. Inventory ballooned, prices dropped, and people freaked out. And it really wasn't until the fall of 2022 that things began to recover from that craziness. And by recover, I just mean homes start selling again and median price stops dropping. We really haven't bounced back in terms of the way the market was before the summer of 2022. And we may never see a market like that again, at least not anytime soon. Low rates made people really not care as much or at all, frankly, about what they were paying for a home. People were putting in offers. List to sale price ratio was out of control. So that jump in interest rates when the Fed really stopped their bond and mortgage-backed security buying program really just shook the real estate world and has continued to sort of dominate the news ever since then. So being below 6 is a psychologically a big deal for anyone in the industry. Does it make a huge difference from last week or 2 weeks ago when it was 6.01 or 6.1? Not a huge difference here. However, if this continues to go down, you're really going to see something in terms of new listings, in terms of buyer activity. Most of us agree that somewhere in the mid 5s, if we were to stabilize in the mid 5s, you would really see an explosion of activity. And overall activity has been at historic lows really since that happened in the summer of 2022. Summer of 2023, real estate activity overall was at a 30-year low, and it's kind of been that way ever since. And I always say this, less real estate activity means less economic activity overall. A lot of people work when homes get sold, not just lenders, not just realtors. You've got all sorts of ancillary trades. You've got escrow, you've got title, you've got termite, you've got plumbers, you've got electricians, you've got roofers, flood and mold people. If I left any of you trades out, I'm sorry. But a lot of people work when homes get sold. So lower rates, more activity equals better economic outlook for everyone. So that's why I'm so animated about this today. Really exciting stuff. So that's what's going on in San Diego real estate this week. If you like this content, please give us a like, share, subscribe, and comment. We will be back with more great real estate information for you. So stay tuned. And of course, we'll see you right back here.